You have no clue what it means when the world is 400% of GDP in debt. Even Elon, who can solve going to Mars, can't solve this. If I'm to allocate to the S&P 500, I'm basically breaking even versus debasement. Diversification destroys returns now because you've got one clear macro factor. It's also the same factor that is driving P ratios that drives everybody nuts. But I think it's becoming pretty obvious that AI and robots are replacement humans. And this is the bit that gets contentious with people and they hate it.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul talks Bitcoin and the big macro picture markets, money, and what's next. Stay tuned. You'll want to hear this.
The big picture part is, look, from our work, we kind of noticed the business cycle structure. We're both business cycle analysts. We've both been looking at them for a long time. It changed after 2008, and it became like a metronome every 4 years. That's only happened once in the past, which was the 1950s and 60s, where it became very, very cyclical. But this is perfectly cyclical. And it got me thinking for a while, what the hell? So many of us didn't understand what happened to asset prices after 2008. We kind of knew quantitative easing was happening. We kind of knew stuff, but we didn't figure it out. And what I suddenly realized is that in 2008, we had a debt jubilee. And in fact, it was just forgiveness on interest. You don't pay interest payments. Remember, we did that over COVID. Exactly the same mechanism, no interest payments. So no interest payments allowed every government who had basically, they'd all gone over 100% of GDP in debt. So all economic activity, all economic growth was used to paying of debts. So what they all did was basically restructure their debts between 3 and 5 years, creating an almost perfect 4-year cycle. And then when you look at the debts today, we're in that 4th year now, where the final part, the larger part of the debt is due. And what we found is they start injecting liquidity over a period of 3 years, reaching maximum liquidity. That liquidity injection never really gets taken back. Some gets taken back in the bear market years when they're withdrawing liquidity, raising interest rates, trying to slow the economic cycle because of inflation or whatever. But over time, liquidity keeps rising. It's rising at a rate of about 8% a year. And that is, in fact, the debasement rate of fiat currency. And what happens is, and this is the bit that gets contentious with people and they hate it, if you divide an asset by the global liquidity, you get to see whether it's outperformed. The debasement,
people hate that chart.
Before they hate it. It is the best chart in the world because it then tells you, okay, if I'm to allocate to the S&P 500, I'm basically breaking even versus debasement. So the S&P 500 is not really adding much value. Well, when you look at the Euro stocks and other markets, which are priced in their local currencies, you put them in dollars, they look similar. All the markets look very similar once you adjust for debasement.
Bitcoin could be on the verge of another major rally, and it's all thanks to a weakening U.S. dollar. The U.S. dollar index, which tracks the dollar's strength against a basket of foreign currencies, just hit its lowest level since early 2022. Even more striking, it's now trading over 6 points below its 200-day moving average, a deviation not seen in over 21 years. Historically, this kind of dollar weakness has often signaled strong upside for Bitcoin, due to their well-known inverse relationship. On-chain analytics firm CryptoQuant points out that the DXY's current level marks a significant turning point. While the dropping dollar may sound negative at first, it tends to push investors toward alternative assets, and Bitcoin is often first in line. As the dollar loses its traditional safe haven appeal, people are increasingly looking at BTC as a better long-term store of value. Interestingly, while Bitcoin hasn't yet reacted to the DXY's dive, past data shows that similar scenarios have led to bullish breakouts. Economist Lynn Alden emphasizes that if the total dollar supply keeps growing alongside mounting U.S. debt, Bitcoin's case becomes even stronger. Right now, the dollar's weakness might just be giving Bitcoin the fuel it needs for its next big move.
So that was interesting to me. Gold, complete almost flat line, really, versus debasement, as it should be, right? That's gold's job. It's to be the stable currency. And once we look to the world through this lens of the debasement of fiat currency, which again is still contentious, becoming less so nowadays, but it was really contentious when we started it, we realized there's actually only two assets that outperform this. One is tech stocks, and the other is crypto. And so that completely changed how I allocated and how I understood tech stocks. I was a macro guy. I hated tech stocks. They're always too expensive. You're always a value guy. And I realized none of that made sense in this market. That's why the value investors have been getting killed, is what had happened was all of this. Now, what is driving this? And I think, Julian, if you can just bring up those demographic charts, because these are the absolute most important charts in the world, really to understand. GDP growth is driven by this magic formula, which is debt growth plus population growth plus productivity growth. That's how you drive trend rate of GDP. Now, debt growth's gone to extremists, and now really we're just servicing debts. Basically, GDP keeps falling, and it's falling over time, the trend rate of GDP, because of the magic formula. And Julian, if you can get to the demographics charts, because they're the key ones here. The issue is here, the biggest secular factor in all of markets is this one thing, is the aging of population. And we can see the births rate is falling in the US much faster elsewhere. So that obviously is a function, the labor force participation rate, the size of the workforce, is a function of births, deaths, or the number of people being born, whatever, right? And you hear the phrase demographics of destiny. They are, until the AI and the robots come, which are basically artificial humans. This is the problem that faces us all. But there's a way that they've got round this. If you go to the next chart, is they've increased government debt to offset the declining growth from the population. So part of the magic formula was the debt growth, and the other was the population growth. So they've used debt growth. This chart nobody understands, and it's never been copied on X, which is the bizarrest thing, because it's the most incredible chart of all, which basically says that all government debt growth is basically a function of labor force participation rate.
Solana, Raoul, is heating up, and the charts are pointing to something big. With the odds of a spot Solana ETF approval skyrocketing to 99.7% on Polymarket, excitement around the altcoin is reaching new highs. Analysts believe this could be the catalyst that propels SOL to its next major milestone and potential $300 target. Technically, SOL is showing signs of a strong rally. A bull flag has formed on the daily chart, a bullish continuation pattern that usually follows a steep rise. If SOL breaks above this flag, the technical target sits around $303, nearly doubling from current levels. Momentum is building too. The daily RSI climbed from oversold territory at 31 in late June to 53, indicating growing buying interest. But price patterns aren't the only bullish signal. Analysts point to rising network activity, increasing fund flows into Solana from other chains, and major ETF filings from financial heavyweights like Vanek and Grayscale. All signs point toward deepening institutional interest. Bloomberg's James Seifert expects a wave of ETF approvals in late 2025, which could open the floodgates to institutional capital. If approved, a Solana ETF could significantly boost demand and push SOL well beyond $300, with some even eyeing $500 or more. The race is on. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.